Did you know that the majority of property management issues and risks can be avoided? I was not aware of this until I looked back over all the property management problems I've encountered over the past 2 decades, and today I'm sharing what I've learned with you. Welcome to Strategy Saturday. I'm Charles Carillo, and today we're diving into a crucial topic: how to identify hidden property management risks. Whether you're a new real estate investor or a seasoned investor, identifying and fixing these risks can save you money and prevent unnecessary headaches. So let's get started and take your property management to the next level. When I speak to new real estate investors, I always stress that they manage their own property or properties themselves for at least a couple of years. Of course, if they are highly paid professionals, this doesn't really make sense, but if it is possible, it will teach you the whole property management business in a relatively short period. The second benefit of this is that once you graduate to hiring a third-party property manager and become the asset manager, your knowledge of property management will make you a better asset manager. Check out episode SS126, that's SS126, to learn more about real estate asset management. But when you're performing due diligence on a new property, you're interested in purchasing or reviewing your current property, there are 2 different due diligence kind of reviews you and your team will be performing: the physical one and then the financial legal one. So let's start with physical inspection. So a complete property walkthrough, looking at everything from roofs to mechanicals and creating a list of immediate and future repairs that will be required. For future repairs, I really want to know the time frame. If a roof has 5 years left, I will start putting money aside for it now, but I'm not going to replace it right now. And compare that to, say, a water heater at the end of its life cycle, or one that is already leaking, which you're going to do that immediately. Now, the second part of the physical inspection portion is going to be what requires more knowledge of local laws and regulations. Now, this is the property's compliance with local building codes, fire regulations, etc. This is especially important with older properties that are not up to code, but were grandfathered in, which is with the properties that I started investing into. They were like 100 plus years old. There was always some sort of something that had to be fixed or brought up to a new code, but the properties would never reach what would be the standards of a new build, though. And usually with these properties, they will be brought up to kind of some sort of same level as a new build, but they're never going to have everything, right? There might be some things that are grandfathered in. For example, they might not have ingress and egress, which like 2 stairs cases or something like this going up to the unit, but they might have like a fire escape and then a regular front door for the unit. Other things they might need, which we had to do a lot of, which was like fire alarm systems. And not knowing this is going to be a costly mistake. And I had this mentor years back, and he was working for a large investment brokerage back in like the 80s. And it was when he was in LA, and this is when the Japanese economy was on fire. They were coming to the United States to buy everything, right? And they're buying this high rise. It was 40 or 50 floor office building in LA. And it was an older building, and they were just throwing money. And they bought this property not knowing that code was changing, and they were going to have to put fire sprinklers through the whole property, which was like $1 million back then per floor. Now, obviously, that was a huge costly mistake because they didn't do their due diligence, not only on the property itself. You could walk through and go, oh, this is great. But if you didn't do your due diligence on local codes, which they didn't, which is kind of one of the problems, too, of having too much money when going into any kind of new investment or property or building or business in general. But if they had done their due diligence, they would have uncovered that this is going to be a huge CapEx item, and it would have just negated the whole possibility of this project working. Now, the main part of the physical inspection is that you cannot understand the true physical condition of a property without walking it. Yes, I can see on the financials that we have been spending more money than normal on our HVAC repairs or repairs and maintenance in general, and this should alert you that, in fact, things are being patched up, not replaced. So it does not show the exact physical condition of the property. Now, the physical inspection will also bleed into the financial and legal portion, since replacing or repairing something costs money. Suppose you identify an issue with, say, the sidewalks, for example. In that case, you might speed up the repair before your insurance policy expires to ensure you can renew it, while also fixing something that you're going to have to do anyway, which also lowers your legal liability of someone tripping. Now, the second method of inspection is the financial and legal portion. And this is where you're reviewing all the financials, mainly the rent roll in the T12 or the trailing 12-month financials, and look where you were spending money and compare it to the previous years. Maybe you're spending a bunch of money on HVAC repair. Maybe it's time to replace those units that are consistently having problems, or possibly find another contractor that may be less expensive. I've had to do that before. And consistently review the lease agreement you were using with tenants and update it as required. I would add clauses into your leases when I self-manage properties as something that happened, like we are not responsible for snow off one of our buildings to a car, or items stored in the basement are stored at your own risk. And those were different, clauses that we added on because we had issues with that. And so for people that are renting, hey, this is it. You can store stuff in the basement, but that's all at your own risk. And, if you're parking this buyer, buy one of the properties, buy one of the roofs, just be aware that, something comes off the roof, it's your responsibility. And make sure your tenant screening process is thorough and that there are no holes where less than ideal tenants make it into your units. And obviously, if you've listened to this show before, I am a huge proponent of really thorough tenant screening, and review your evictions and delinquencies year over year to see what direction your property is heading. Okay. Now, the one thing, when you're doing property management, is there's not going to be an immediate change. Okay. You can't just say, okay, we're tightening up tenant screening, and 2 months from now, we're not going to have any more evictions. No, it's going to be something that's going to take many months, maybe even years for that to come out, right? As you have bad tenants that are transitioning out, they leave. And when those new tenants come in, you're really going through them thoroughly and making sure, and then you can really get an honest idea of where your property is going. But you really have to start charting it, and you have to look back, 12, 24 months to really figure out what's happening. And consistently review similar properties in your local area to see where rents are. What do the property and the units look like for those rents? How can I best maximize the value of my property? Maybe perform some simple renovations to bring your units to market rent. And always review vendor contracts. When in doubt, send them to your attorney for review. Are there any repairs that need to be completed? Receive quotes from licensed and insured contractors for larger jobs outside of your handyman's kind of scope for these repairs, and start budgeting for them. Again, with the roof, 5 years out, maybe there's something else that you see and you're going to go, this has to be replayed in 3 years. This has to be repaired or replaced in 5 years, whatever it might be. You can start budgeting for them, and you know exactly kind of what it's going to cost. So getting and being proactive about that is going to make it better. It's also when those items actually go bad, or maybe it's over the summer and, you have a furnace and your contractor comes to you and goes, listen, we don't have that much work. We'll give you a deal on doing these furnaces, which has happened to me before. And that's another thing too. And you're like, okay, let's do it. I have some money aside already. And we'll do these jobs right now because I know they have to be done. Now, are there any issues with current tenants? Are any of them risking being delinquent? Do you think you might need to evict one? Start putting together a plan now for a potential tenant issue in the future. Possibly speak to your attorney, drop them a message. Once you do more work with your attorney, they're not going to be charging usually by hour for these evictions and stuff like that. It's usually something they're going to be on a per tenant basis. And it's something like letting them know, hey, I might have something potential coming up, or I have a question about this, and they'll be able to walk you through what you're going to need to do, what you need to do. So when the time comes, you're not scrambling for documentation. It's really, they can handle it all for you. And speak to your insurance agent. Are there any less expensive insurance options that might have become available since your last policy renewal? Maybe they brought on new carriers, and how you can lower your insurance premium, maybe by doing some sort of renovations to your property. I don't really find that these really help that much with your premium, but it's always something that you can ask, and they might look through and say, well, this is older over here. This has to be done. And maybe it's something that you were going to repair anyway. So now when you know that's been repaired or that's been added or replaced, you can reach out to your insurance agent. We had this before with, like I said before, fire alarm systems. We had to put those through older properties in these property that I owned in Connecticut. And it was something where I didn't know I had to have them done. They were required by the city, right? So we do like one, it was like a few $1,000s per property, maybe a little bit more. So you do one, and then maybe a year or two later, we do another one as they kind of went through the neighborhoods and kind of canvassed everything and told us we had to do it. Fine. So the thing that was that what we did was, I didn't know this, but when I was coming up to my second one, I spoke to my insurance agent. It's like, oh, let us know. I didn't know you had that. So now that's going to lower your premium. So no matter what they lower it, it's going to be a win-win because you had to do it anyway. Now, is there any new software or technology that you can incorporate into your business? Bring on a virtual assistant? Is it best to speak with our landlords and kind of see what they use? This is one of the things I found, because you can like search online, you find all the software, and maybe a lot of it's not really applicable to your business. But if you're going to any masterminds or conferences or local meetups and you find investors with maybe, same properties that you're working with, but maybe they have a bigger portfolio, which is great, and kind of figure out what they're using and listen to what they're doing. What issues are they having? And kind of how they've corrected it. I just love asking about the software, because you'll find out usually it's a lot simpler and less expensive than when you search online and and someone's trying to sell you this really in-depth system that's not even for any type of portfolios near your size. And also ask them about the pros and cons of the software. So some people say, I use this, but it's not that good. This is the one I really want to go to, but getting over there is going to be a problem with moving everything over. We haven't done it yet. And this is information there. It just saves you a whole bunch of time that maybe I'll just start with the one that they're moving to instead of starting with this one and kind of working my way and going through the same kind of growing pains that they're going through. And it's important to thoroughly vet any property before purchasing it, since a lack of due diligence is typically a major mistake investors make. Secondly, investors should regularly inspect their current properties to uncover potential problems that can usually be fixed now for less money and less hassle than they would be in the future. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments on potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then.
You always want to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.